Florida's state auditors just found $1.9 billion in wasteful county spending. And that is from only 12 of the 67 counties they've looked at so far. In every single one of those counties, the waste they identified covers a third of the entirety of the property tax bill collected from local homeowners. In 3 counties, the waste actually exceeds the total homestead tax. In Palm Beach County alone, auditors found $344 million in total potential savings, enough to cover 2/3 of the entire non-school homestead tax bill for the whole county. By the end of this video, you'll know exactly how much of your tax bill is going to waste and why the people in charge don't want this spreadsheet getting out. The pressure on the Florida homeowner has never been higher. You're already paying 2, sometimes 3 or 4 times what you paid in homeowners insurance just 5 years ago. Between those premiums, rising grocery bills, and the general cost of living in this state, everyone is looking for a break. Whether you're buying your first home in Tampa, managing a rental portfolio in Jacksonville, or you've owned your forever home in Citrus County for 30 years, the math of property taxes is about to change. The state recently formed what they're calling DOGE, the Department of Government Efficiency, which is Florida's own program to audit county-level spending. This is separate from anything happening at the federal level. Think of it as a state-run efficiency review, and the results are explosive. Now, before we dig in, let me clear up the biggest misconception. Most people hear tax cuts and immediately think that means they're going to cut the police or the fire. Today, I'm going to show you that for the majority of Floridians, we can dramatically reduce your non-school homestead taxes just by trimming the fat. And in some counties, the waste alone could wipe out the homestead tax entirely. And when I say non-school homestead tax, here's what that means in plain English. That's the chunk of your property tax bill that goes to the county, not to schools, not to the state, just your local government operations. That's the piece we're focused on today. And remember, if you're a Florida homeowner, your assessed value is already capped at 3% annual increases under the Save Our Homes. So the number you're paying today is often well below what a new buyer would pay on the same house. That makes the waste even harder to justify. But, and this is critical, I'm going to show you why the impact of any tax change depends entirely on 2 things: how big your county's budget is, and what percentage of that budget comes from homeowners versus commercial properties. Those 2 numbers tell you everything. Let's break down Florida's 67 counties into 3 tiers by total budget size, because the size of the budget tells you how much room a county has to absorb change. And everything I'm about to walk you through is in a free spreadsheet, link in the description, so you can follow along with your own county while I break this down. Let's talk about the big budgets first. 5 counties in this state clear the $5 billion mark. Miami-Dade at $12.7 billion, Palm Beach at $9.6 billion, Orange County at $8.3 billion, Broward is at $7.8 billion, and Hillsboro is at $6 billion. These are enormous operations. And here's the number that should jump off the screen. In all 5 of these counties, homestead taxes only make up 4.5 to 7.7 of total revenue. Take Miami-Dade. Homeowners contribute $779 million in non-school homestead taxes. That sounds massive, right? But the county's total revenue is $12.7 billion. Your homestead taxes are 6.1% of their budget. Meanwhile, non-homestead property like commercial buildings, rental properties, vacant land, that kicks in another $1.4 billion. The remaining $10.5 billion comes from other revenue sources. So what does the DOGE audit say? They found $302 million in waste. That alone could cut the homestead tax bill by 39% without touching a single police officer, firefighter, or essential service. Now, look at Palm Beach. The audit found $344 million in waste against a homestead tax base of only $515 million. That's a 67% coverage ratio. What does that look like on your kitchen table? If you own a $400,000 home in Palm Beach County, roughly $200 a month of your tax bill is going towards spending the state's own auditors call unnecessary. That is a car payment. And by the way, if you're watching Florida's housing market from outside the state, this is the kind of structural shift that could make Florida even more competitive against Texas and Tennessee on total cost of ownership. Lower effective property tax on top of no state income tax. That is a magnet. And then there's Hillsboro, the Tampa metro. Budget is $6 billion. Homestead taxes, $340 million. Only 5.7% of the budget. The Doge audit found $278 million in waste. That's an 82% coverage ratio, the highest of any Tier 1 county. If you're a first-time home buyer in Tampa, the state is essentially telling you that 4 out of every $5 you pay in homestead taxes has a matching dollar of waste sitting in the county's budget. So, what does all of this add up to? These counties are so large and homestead taxes are such a tiny slice of their revenue that efficiency savings alone could deliver massive tax relief without destabilizing anything. Here's the angle most people miss. Because homestead is only 5 to 8% of revenue in these counties, wiping it out is actually manageable from a budget perspective. The county barely flinches. The political argument that we can't afford tax cuts falls apart when you look at the actual percentages. If you want your specific county's number, drop the county in the comments right now. I've got the full data for all 67 counties, and I'll reply with your breakdown. Now, for smaller budgets, but not quite rural, this is where most Floridians actually live. 24 counties fall into this tier, from Manatee at $2.5 billion down to Walton at $500 million. In this tier, homestead taxes generally make up 6.5 to 11% of total revenue, noticeably bigger than Tier 1, but the real story here is the variation. Let's look at Duval County. That's Jacksonville. And Duval is an outlier you need to understand, because Jacksonville has a consolidated city-county government. Their budget structure is unlike anywhere else in the state. Homestead taxes are 19.2% of total revenue, near triple the Tier 1 average. Non-homestead property makes up another 34.1%. That means over half of Duval's revenue comes directly from property taxes. The Doge audit found $199 million in waste against $403 million homestead base, a 49% coverage ratio. Not bad, but Duval would feel the loss of homestead revenue far more than Miami or Palm Beach would. And investors, keep your eye on Collier. Naples has a non-homestead property tax share close to 15% of total revenue, meaning any shift away from homestead taxes lands disproportionately on commercial and rental properties there. Compare Duval to Seminole County, where homestead is only 6.6% of revenue, much closer to a Tier 1 profile. Now, here's an outlier that should get your attention. Alachua County, that's Gainesville. Doge potential found $84 million. Homestead tax base is only $63.8 million. That's a 132% coverage ratio. The waste actually exceeds the entire homestead tax. Alachua is one of only 3 counties in the state where this happens. The others are Flagler and Nassau. The Tier 2 takeaway, the math mostly works here, but the homestead dependency varies widely. Counties like Seminole have plenty of room. A place like Duval, where property taxes are over half the budget, needs a much more careful transition plan. Now, here's the part that most people miss. It is the reason your tax bill might actually stay high despite everything I showed you. The Florida House just sent the Senate a series of bills intended to fix this, but there is a massive mathematical hole in their logic. Here's a number that should scare you. The rural tier, the 38 counties with budgets under $500 million. Homestead taxes jump to 9 to 15% of total revenue. That might not sound like much more than the big counties, but when your entire budget is 20 or 40 million, losing 10 to 15% means your roads don't get paved. Your volunteer fire department can't replace a truck. In Flagler County, the homestead taxes are 15.4% of the budget, 3 times higher than Miami-Dade's rate. And in at least 20 rural counties, the House bills would create a funding gap with zero plan to replace it. If you live in a rural county, if you're an investor looking at affordable land, or if you're relocating to Florida and eyeing those small town price tags, the house completely ignored you. Let me show you what happens to your property and your community when Tallahassee pretends every county is Miami. Now, for the rural counties, the ones that are going to need help. The House recently passed several tax reform bills, and I'll be blunt, they're half finished. They don't account for this third tier at all. 38 counties fall below the $500 million budget line, and the math here is completely different from Miami or Tampa. Look at Flagler County. Total budget, $300 million. Homestead taxes, $46 million. That's 15.4% of their entire revenue. That is 3 times the rate of Miami-Dade and the highest homestead dependency in the state. The DOJ audit found $59 million in potential savings, which actually exceeds the homestead base on paper. That's a 128% ratio. But Flagler is right on the edge. Non-homestead property is another 27.3% of their budget. Between homestead and non-homestead, property taxes are over 42% of everything Flagler brings in. That means nearly half of every dollar Flagler depends on for roads, parks, public safety comes directly from the property owners. Take away the homestead piece and you're asking the remaining taxpayers to carry a load that no county this size can sustain. Now, look at Citrus County. Remember our 30-year homeowner, the person who's been paying into the system their entire life? Citrus has a $450 million budget. Homestead taxes are $43.8 million, about 9.7% of revenue. The DOJ audit found $39 million, which gives us an 89% coverage ratio. Close, but not complete. And Citrus doesn't have Miami's luxury projects to cut. Their budget is roads, fire stations, and a library. There's not much fat there because there's never much fat to begin with. Then you get to the truly small counties. Lafayette, total budget, $15 million. Homestead taxes, $1.2 million. Liberty County, $15 million budget. Homestead taxes of just $800,000. These places run their entire county government on less than what a single Miami-Dade department spends on office supplies. The waste auditors can find here is close to zero because the budgets are already bare bones. The House bill assumes every county has the same level of excess to trim. They don't. If you're relocating to Florida from New York or California or anywhere up north, and you're looking at a place like Nassau County because the sticker price on the home seems incredible compared to what you left behind, you need to understand the tax math is completely different. And look, Nassau has the real appeal. You're minutes from Amelia Island, the schools are strong, and the growth trajectory is real. But Nassau has a $400 million budget with Homestead at 9.1% of revenue. The DOJ audit found $53 million against a $36 million in homestead taxes, 146% ratio. It's the highest in the state. On paper, that looks amazing, but Nassau's total budget is tiny. There's much less room to maneuver if the transition goes sideways. If these bills pass as written, you might find your local library shutting down or secondary roads going unpaved because the legislature didn't include a safety net. Now, if you're an investor, pay close attention. When a rural county loses homestead tax revenue and doesn't have the waste to cut, they hunt for replacement revenue. And that means hiking taxes on commercial property and non-homestead rentals. Let me walk you through what that looks like. Say you own a duplex in a Tier 3 county and you're currently paying $3,500 a year in property tax. If the homestead tax disappears for owner-occupied homes, but the county still needs that revenue, they don't absorb the loss. They reassess. Your non-homestead tax rate could jump by 15 to 25% to fill that gap. Your $3,500 bill becomes $4,200 or more. And that increase gets passed along to your tenants, driving up rents in the communities that can least afford it. In Tier 1, this shift is barely noticeable. Homestead is only 5 to 8% of revenue. In Tier 3, where homestead is 10 to 15% of a much smaller pie, losing it creates a crater that has to be filled from somewhere. The House bills completely failed to address this. They're claiming to give homeowners a win, but they're potentially creating a nightmare for the people who provide Florida's rental housing. What we need is a tiered system, a state-backed transition fund that uses the surplus efficiency savings from the Tier 1 counties to stabilize the Tier 3 counties during a 10-year phase-out. Without these bills are political theater that won't survive a Senate vote. So here's the bottom line. The data is clear. In our Tier 1 urban powerhouses, all 5 of them, homestead taxes are barely 5 to 8% of the budget. The DOGE savings alone can fund massive tax relief without any disruption. In the Tier 2 mid-majors, the math mostly works, but watch out for some of the outliers like Duval, where property taxes are over half the budget. In Tier 3, our 38 rural counties, the budgets are far too small and too lean for a one-size-fits-all approach. Until the legislature stops sending half-finished bills that ignore these communities, your tax break is stuck in political limbo. If you're a current Florida homeowner, here are your 3 takeaways. The waste is real. Among the 12 counties audited so far, the identified bloat covers 31 to 146% of the homestead tax bill, and 55 more counties are still waiting to be reviewed. The House bills are flawed. They don't protect rural infrastructure or prevent tax shifts onto investors and renters. The math works with a tiered approach. We can get to zero homestead tax, but the state has to be the backstop for the smaller counties. Think about what that would mean for your family. An extra $200, $300, maybe $400 every month back in your pocket. Not because of some political gimmick, but because the people spending your money were finally forced to spend it responsibly. That's the promise sitting on the table in Tallahassee right now. The question is whether our legislators have the courage and the math skills to deliver it. I've built the full data spreadsheet for all 67 counties. You can filter by your county and see exactly how much of your budget comes from homestead taxes, how much waste the auditors found, and whether your county can actually afford to cut your bill, or whether you're in a gap county that needs a state lifeline.
The link to the spreadsheet is in the description box below.
And drop your county name in the comments. I'll personally reply with your waste to tax breakdown. Let's hold these local and state leaders accountable to the actual math. Hey, this has been the Florida Real Estate Insider. I'm still Tom McNamara. I'll see you in the next one.